Good afternoon, everybody, and welcome to this RegTech Rising webinar. I am Sophia Bantanidis, the EMEA Head of Regulatory and Market Strategy at Citi. I'm joined on the line with Nick Cook, Head of RegTech and Advanced Analytics at the FCA, Melissa Koide, Founder at FinRegLab, and Jeff Bandman, Founder and Principal at Bandman Advisors. Welcome, everybody. Now, we will be live tweeting this webinar, so you can join in the conversation using the hashtag RegTechWebinar. A few introductory comments from myself first. One of the biggest challenges affecting financial services firms today is regulatory compliance, getting your compliance right and on time, and proving compliance to the regulators and also to your own organization. RegTech providers are responding by wrapping innovative technologies around regulations to make compliance cheaper, simpler, more flexible, and some would say to make compliance invisible. The opportunity that RegTech firms offers, some would say, is game-changing, but the variety of solutions on the market are vast, and the implementation process also comes with some challenges. In today's webinar, we will cover RegTech from different angles: adoption, risks and challenges, and the future outlook for the sector. A little bit about why I am interested in RegTech before I hand over to the panelists to introduce themselves. I have worked for a range of banks in risk and compliance, and I've also worked on the other side of the fence for two different regulators in the UK and in Paris. So I've seen the pains and the challenges on both sides of the fence when dealing with regulatory developments. I've worked in compliance. I've had those painful conversations or confrontations, if you like, with the business when it comes to interpreting and implementing regulation. And if RegTech is set to make regulation easier for all sides, regulators and regulated firms and compliance in the business, then that is something that I am interested in from a personal perspective. Now, before we start chatting, I'd like to remind you that we will be holding an interactive Q&A after the presentation. If you have any questions during the presentation, you can send them to us using the Ask a Question button at the bottom of the screen. We will also have an exclusive surprise for all those who are registered today, so please don't hand it off too soon. And now we're ready to start the session. So first of all, the introductions from the panelists. I'd like the panelists to introduce themselves, their organization, and to talk a bit about what RegTech means to them. So starting with Melissa first, please.
Absolutely. Thank you, Sophia, and thank you for the opportunity to be a participant in this conversation about RegTech. I am Melissa Koide, and I am the founder and CEO of FinRegLab, which is a new startup not-for-profit organization, which is ultimately seeking to answer some of the core questions that regulators and policymakers have in terms of the implications, both the benefits and the major risks and considerations of the integration of new technologies and the use of data in financial services. I'm coming to this conversation having spent 4.5 years as the Deputy Assistant Secretary at the U.S. Treasury Department. And so just to make it very explicit, my perspective on this is quite U.S. focused. But I am coming at this having been sitting in the seat for 4.5 years, responsible at the Treasury Department for deepening our understanding, the administration's understanding of the potential benefits and considerations of the use of data and technology in financial services. My office was responsible for digging into understanding the marketplace lending sector that was burgeoning as of 5 years ago, and it's obviously significant in scale today. We also dug in very early on in looking at cryptocurrencies, the implications of cryptocurrencies. Digital currency at the time is how we talked about it, for purposes of de-risking and financial inclusion. And across the board, because we were sitting at the Treasury Department as a non-regulator, but very engaged with the U.S. regulatory agencies, both at the federal level and across the states, we continue to be faced with perspectives, both coming from industry, the fintech sector, and the vast opportunities that the fintech sector would share with us in terms of what their technology and what they're offering would hold for consumers and the economy. while at the same time also having conversations with others who were on the other side of the perspective. Sometimes incumbent industry players who would share with us what are the real risks associated with non-banks, fintech firms in financial services, and then also being engaged with consumer advocates here in the U.S. who would raise many concerns and considerations. What are the implications of the use of data in credit risk, credit assessment? Are there potential disparate treatment risks associated with that? And so those 4.5 years were quite insightful and also illuminated what's clearly a need for U.S. regulators, but also global regulators, in really deepening with facts and understanding about what the implications are of the use of data and new technologies as they're applied in the financial sector. Just setting the table, I think everybody obviously at this conversation realizes just how foundational policy and regulation is. I was at a meeting yesterday and someone noted regulators are effectively agents of change. They may also be agents that thwart change, but ultimately their ability to allow and support the use of technology and data depends upon their ability to have fact-based and practical understanding of the implications of these new technologies. Yet today, there's a dearth of evidence-based research and analysis really digging in and understanding implications as they relate to particular regulatory issues. For context, here in the U.S., we've got 72 state regulators, 6 main federal regulators with authorities in the financial sector. As much as these regulators are interested in understanding and applying resources to understanding the implications of new data and new technologies, they really do lack resources to dig in and understand the implications themselves. Compounding that challenge is we have regulators with different agendas and different priorities, all competing for what their priorities and what their agencies' needs for addressing really are. And so that's where this new organization, FinRegLab, is intended to step in. We are specifically interested in digging into questions that pertain to the retail financial services sector. And the way that we are going about answering these questions facing regulators that will have bearing on the front end, meaning what are the rules that exist today, what are the guidances, what are the laws themselves, and where might they need to be modified or changed. And they may also have implications for what I term the back end, really the important compliance side, which is, I know, a lot of our conversation. But the way that FinRegLab is going to go about addressing and defining answers to some of these pressing questions does build on the idea of establishing an independent laboratory in order to actually undertake tests, pilots, and also creating a database that can be used to actually dig in and answer some of the pressing questions. So the last thing I want to mention before I turn it over to my colleagues is I think, especially from the U.S. side, there have been a number of efforts made by U.S. regulators to really be open to the fintech sector, to better be a resource for the fintech sector in understanding where to go to get answers to pressing questions as they are new entities seeking to comply with U.S. regulations. There are a number of different efforts by the different regulators to do that. Innovation offices, the OCC has one, CFTC, Jeff, I'm sure we'll talk about that. But nevertheless, they are open to and quite interested in learning from new laboratories, sandboxes, it's the term I know that's used globally, but I think there's a big opportunity for all of us on the outside of the regulatory sector to build the depth and the learnings and the knowledge, and the U.S. regulators and others are open to hearing those insights from those tests and factoring them into how they are defining the rules of the road, how they are implementing their compliance expectations. So I will stop there, and I'm looking forward to having a conversation about what FinRegLab offers and also hearing from my colleagues.
Thank you very much for that comprehensive introduction, Melissa. I'd now like to turn over to our regulator on the panel, Nick. Nick, can you please introduce yourself, your organization, and a little bit about what RegTech means for you?
Yeah, absolutely. Thank you, Sophia, and good afternoon, everyone. I'm Nick Cook. I lead the FCA's RegTech initiatives and also the creation internally of our Analytics Centre of Excellence, where we try and deploy and use some of the RegTech technologies for our own supervisory purposes. The RegTech broadly has kind of two dimensions that we're interested in. One is how it is applied by firms in meeting their compliance challenges and their compliance obligations. And we see significant opportunities, not without risk, and I think we're going to talk about that, but significant opportunities for firms achieving earlier compliance, so moving towards more preventative and real-time detective compliance activities rather than post-event identification. We see opportunities for using technology to have increased surety of compliance, so fuller compliance, and some of the technologies that are focused on moving away from sort of manual processes based on sampling to universal review, provide that opportunity for more surety of compliance. And some of the RegTech solutions are focused on this idea of compliance by design, so embedding compliance into the operational processes of systems through things like smart contracts. We find that a very interesting dynamic where compliance is embedded into the process. More broadly, we see the opportunity for ourselves to exploit the myriad of data and information that we have available to us, both the unique data that we have available as a regulator, but also a lot of the public and open data that's now becoming more accessible and usable. And we see opportunities for us to modernise how we approach some of our own operational processes through the use of RegTech solutions. So the FCA, just so that, to make sure everyone's aware of what we do, we are a significant UK-wide financial services regulator. We're responsible for the conduct, supervision and regulation of 56,000 firms. And we're also a significant prudential regulator in the UK for about 54,000 of those firms. So we're interested in how technologies can modernise and improve compliance practices in the market, but also how we can apply those to ourselves. Thank you.
Thank you very much, Nick. Now I will turn over to Jeff. Jeff, for your introduction, please.
Great. Good morning, Sophia and colleagues. Thank you for having me. Looking forward to today's discussion. I am the founder of Bandman Advisors, a U.S.-based advisory firm focusing on working with financial services firms deal with the technology and regulatory challenges today. Like Melissa, I'm a former U.S. government official, and I bring that perspective to bear. I worked at the U.S. Commodity Futures Trading Commission, which is a U.S. market regulator overseeing the derivatives and swaps market. There I had a few different roles, which really all have a relationship in the way my views on RegTech and FinTech have developed. I was responsible for the division overseeing clearinghouses as well as an advisor to the then chairman of the CFTC on data, technology, issues, and policy. So looked at things from that perspective, and then led the CFTC's staff working group that started to look at blockchain and FinTech issues and advised current Chairman Giancarlo on FinTech issues, culminating in the CFTC's launch this past May of Lab CFTC, which was the first U.S. market regulator to launch an innovation lab focused on engaging with innovation in this space in regulation and technology. And I must give due respect to Nick and his colleagues at the FCA who've shown great leadership in this area and in thinking about, from the perspective of a U.S. regulatory agency, what should its footprint be. There were really two sides of the coin, and I think these correspond to the two sides of RegTech. One of them was to make it easier for innovators to engage with the regulator, and this would tie into the element of RegTech, which is technology that is used by firms to help them comply, and some of them for the advanced purposes that Nick Cook already mentioned of greater detective and curative as well as preventative capabilities. But then the second side of RegTech that's very important is there a way for the regulator itself to use some of these technologies to do its own job more efficiently and effectively? And I think we'll be talking about that more in this discussion, because I think that could also have a transformative impact on regulation. In terms of my current work and what I'm seeing in RegTech, I'm working with RegTech firms inside and outside the U.S., helping them to navigate and make sense of what some people refer to as the patchwork of the U.S. financial regulation, and really to help firms engage in what I would call a matching exercise, where there's some really interesting and powerful new technologies and capabilities being developed today, and really to help them match the needs and capabilities to the strengths of their products, to where the needs are in terms of which firms complying with rich frameworks can most avail themselves of those technologies, so that they don't boil the ocean in terms of trying to offer the same technology to everybody.
Okay, great. Thank you very much for that, Jeff. This is a perfect segue now to talk about our first topic, which is the adoption of RegTech solutions. So my first question, and I'm going to start off with Nick, is how are you using RegTech internally? I.e., how is the regulator, the UK regulator, using RegTech for its supervisory or even policy purposes? Nick, question for you, the first one.
Sure, happily. I think what's probably worth noting is RegTech is both very old and very new. So the regulators have used technology-enabled processes for decades. But what's changed is the dynamic nature of those technologies, the flexibility of those technologies, and the access to the wealth of data that's now available. So we've been using what some would consider RegTech for a number of years. But I think where we're really starting to branch out and make more investments and make some more progress is how we use things like machine learning, how we use things like natural language processing, and how we apply those dimensions of artificial intelligence to some of our processes. And it kind of falls into a number of different buckets, I guess. One is looking at where we do manual processes that can be automated, and certainly a number of NLP applications support us in removing manual process from our operations. And when, as I mentioned earlier, when you've got 56,000 firms to supervise, removal of manual inefficient processes is very valuable. So we're looking at a whole series of areas where we may apply those kind of technologies to our authorizations processes, or to our risk identification processes when we receive a lot of documentation from the industry. We're also looking at how we can use certainly supervised machine learning for better predictive modelling of market participants, so understanding how conduct risks arise and what the best lead indicators of that may be, such that we can intervene sooner. So we're doing a lot of work looking at how we deploy supervised machine learning for that purpose. Equally, some of the technologies around sort of graph analytics are interesting for us. So this enables us to get a different perspective on how different participants in a market are connected and how the network between different participants operates. So we're looking at how we can apply some of these graph theory and graph analytics approaches to detect market abuse and insider dealing activity. On the more, I guess, cutting edge of some of what we're doing, we're starting to branch out to look at how we might use visual analytics. So it's not really an area that we've had much exposure to before, but we were interested to see how we might use our understanding of behavioural economics and some visual analytics approaches to detect misleading financial promotions, misleading advertisements. So that's another area that we're looking at. And then the sort of final area where I think if you look at the RegTech pages on the FCA's website, a lot of our focus at the moment is how do we modernise and improve the way in which the transfer of data between market participants and ourselves occurs. We know that is a significant cost for the industry at the moment, not just in the UK but globally. And we like to remind people we don't actually think there's much competitive advantage in how one achieves compliance with regulatory reporting obligations. So we think there's real opportunities to look at how new technologies could make that transfer of data both more accurate but also profoundly less expensive than it is today. So a lot of our RegTech activities to date have been focused on that use case and that problem.
Okay, thank you very much for that, Nick. Melissa, same question to you, but phrased slightly differently given your role. How do you think any laws and regulations need to be modified or tweaked in order to enable RegTech and other tech solutions to be adopted in the market, please?
Yeah, that's a great question. I know when we were looking closely at, for instance, some of the opportunities and some of the costs associated with customer identification program requirements or know your customer obligations, that while from the U.S. regulatory standpoint, it is important for the financial sector to own that responsibility for using data, their own analytics to understand who their customers are coming into the financial system, there is nevertheless potential value in the vast amount of data that's out there to do a much better job in terms of identifying consumers, customers for access to the financial system. And related to that, we also realize there's a vast opportunity for industry to be working together and potentially sharing information among themselves, whether it's on the front end for identification purposes, proofing, or on the back end for potential risks associated with fraud and other types of risk, anti-money laundering, terrorist financing, that there are opportunities for potentially offering industry more flexibility in the data sharing that they could do in order to reduce and mitigate some of the risks around identification. And so there is, I think, there are actually efforts underway to push as hard as industry can under the existing rules to share information. But I think that there's more to do whereby rules could be changed to be much more enabling of data sharing and even perhaps functional utility for information to be shared. But in order to get regulators over the hump for allowing that type of function to grow up, there actually needs to be work done to prove out that there could be reductions in some of the risks when that data is shared. So I think the idea of a sandbox type of testing facility could be really advantageous for helping to ultimately move policy that is more enabling, both in reducing the risk to the industry, but also reducing considerable costs associated with KYC.
Thank you, Melissa. Jeff, over to you. Based on your experience in the firms that you have been advising, are you seeing the right type of RegTech solutions coming to the market? And do you think there is any area where it would be sensible for a RegTech solution to tap into that perhaps we haven't seen yet?
I think we're still, at the early part of the curve. I think that at a certain level, I agree with Nick's statement that firms have been using technology for compliance for years, but I do believe that the type of RegTech we are seeing today is new and different in the sense that you have the convergence in maturity of multiple technologies. And, I think that there's still a ways to go before there will be fuller adoption. There's a couple of things that I would point to that are concerns, maybe two or three areas of focus. First of all, although we are in the midst of an enormous wave of innovation, the barriers to financial institutions being able to adopt those are higher than they have ever been. And partly there's a pressure that I think is coming from one set of regulators for banks and large financial institutions to put in place people with titles like Chief Third-Party Vendor Management Officer, which one large bank told me they now have. I met the person. And they're trying to bring their number of vendors down from something like 80,000 to under 10,000. Now, I can see the benefit of that from a perspective of, having greater control over their outsourcing practices and performing well in stress tests. But when we look at a lot of these innovations, the innovations are coming from third-party vendors. And so while you have banks trying harder and harder to create innovation facilities and, having genuine willingness to do that, when it comes to implementing material new innovations, the number of approvals and sign-offs you need to get in financial institutions of any size, and not just banks, asset managers, others, clearing houses, regulated entities, are more than ever before. And, rightly so. There's much greater awareness now of interconnectedness, cyber risks, the dangers and concerns that people understand risk in a way that they didn't 10 years ago. We're better off for that. But, at the same time, we have vectors that are favoring innovation, and we also have vectors that are making it very, very hard for firms to really penetrate, market penetration within these firms. There's just a very significant gauntlet. Now, there's something similar though not identical phenomenon affecting at least U.S. regulators. This is something that I experienced firsthand while I was working, trying to realize really Chairman Giancarlo's vision for Lab CFTC, which was for the regulator itself to experiment with some of these innovative technologies. For example, an area where I believe passionately there's an enormous opportunity is for regulators to receive and start to use data from distributed ledgers to see data in real time, to start to engage in what I call real-time regulation, kind of like what Nick was describing, using these new tools to be detective and preventative and not just, reactive and viewing things in the rearview mirror. But what we found was that, absolutely well-intentioned rules that are there for very important reasons to promote transparency in government and to achieve, fairness, rules having to do with procurement and ethics, made it very difficult for the regulator at the CFTC to really roll up our sleeves and start to work with, test these new technologies ourselves. And, as people, I've looked at technology for a long time, and it's one thing, to be at a trade show and see a demo. It's another to actually, test a prototype of the thing yourself, test it on your own data internally, try to break it and see what it can really do. But, procurement rules require you to have multiple bidders. There may not be multiple providers of new technologies. They require you to put things out to government contractors. These startups may not have gone through the gauntlet to do that. So those are just a couple of examples. And there are a lot of, again, very well-intentioned and important rules in procurement and ethics which prevent government officials from receiving a gift, like if your agency receives software at below market prices. So, there have been, discussion for the last few years of regulatory sandboxes for innovators, but I think what we may very well need in the U.S. at least is some sort of regulatory sandbox for regulators to start to experiment with these new technologies, with some sort of principle of proportionality and flexibility so that regulators can fully comply with procurement and ethics requirements and yet test some of these new technologies.
Can I just add on to that? It's Melissa. I'm sorry. I wanted to join Jeff in that sentiment and the listing of the challenges. And at some point, Nick, it would be good to have a deep dive conversation with how you all have overcome some of those embedded rules and even laws. At Treasury, we were pushing hard for the use of IRS data, not for the IRS data to be accessible to commercial external stakeholders, but even just the use of the IRS data to be shared with the Department of Education for some of our higher education repayment loan programs. And it wasn't just the rules that stymied our ability to enable that IRS data to be shared with the Department of Education. These were laws in place which govern how and why the data is collected in the first place. And so it's worth a deeper, fuller conversation listing out what are these impediments internally that keep government itself from being able to either use the data for its own public policy purposes internally or external opportunities for leveraging the technologies that could be really useful for regulatory compliance. It's really worth putting a pin in that. Thank you.
Thank you, Melissa, and thank you, Jeff. And I want to pick up on one of the words that both of you have used, namely the sandbox and the regulatory sandbox. And I wanted to ask Nick from the FCA if you think the regulatory sandbox has a role to play in driving forward the adoption of RegTech. I know the FCA was the first regulator to launch such a sandbox. It is mainly for fintech firms, but what do you think about having a type of sandbox for RegTech solutions? Nick, over to you.
Yeah, of course. I think you initially touched the nail on the head there. The sandbox has predominantly been used by fintech firms because one of the facets of our sandbox is that you are given a degree of regulatory support and permission to conduct a test that would normally breach or may be outside of a regulatory requirement. Most RegTech solutions are not themselves performing regulated activities in the same way that when a firm chooses to employ IBM as its software provider or its infrastructure provider, we as a regulator tend not to approve or certify or be involved in that decision. But I think the sandbox at its heart is a safe place to experiment. It's a place for industry participants to collaborate. It's a place in our case, it's a place for us to learn about a technology or a business model or a new idea in conjunction with the industry. And I think based on what Melissa and Jeff and various others regularly say, there is a need to find places and spaces where industry can test safely, can explore new ideas. And a sandbox is one such idea, one such approach. I don't think it's the only solution. So alongside sandboxes, we run hackathons, or we call them tech sprints, but they're basically hackathons. Again, they're an opportunity to bring a group together to work constructively on a shared problem, to share ideas, to share early solutions. And I think there's opportunities and there's value in those kind of events. I think similarly, a lot of financial institutions have their own internal incubators, their own internal labs. And we are starting to see, certainly in the UK, greater willingness to collaborate between institutions, and not necessarily with us being involved in it. Now, often they're quite keen for us to be present, but we are seeing a greater openness towards collaboration between competitors, and indeed a degree of collaboration across borders as well now. So I think sandboxes are one way of providing that safe space. I don't think they're the only solution to this challenge, and the challenge is fundamentally how do you experiment safely and how do you ensure that the various market participants that need to be involved and that need to have an opinion on the technology are included. So it has been useful for us, undoubtedly. It hasn't been the primary method by which we engage in engagement with RegTech firms, but it will be something that we continue to see RegTech firms taking up in the UK and applying into our sandbox.
Thank you, Nick, for that very comprehensive answer. So we've talked a little bit about how RegTech is being adopted. We've talked about some of the challenges. Now we're coming towards the end of the seminar, and I'd like to ask each of the panelists about their views on what are the big picture predictions for the application of RegTech. Where is RegTech heading in the finance sector for 2018? So Melissa, let's start with you. Your future outlook, please.
So I would concur with Jeff, if this is what you were saying, Jeff, which is I think it will be an incremental adoption with industry and the large institutions really leading the way, because I think they have such relevance and such an important stake, especially with the regulators. And as they are finding their way in employing new technologies and the use of data for their compliance obligations, the regulators, and I'm speaking from the U.S. perspective, will learn along with them as they progress. And off to the side, I think we will continue to see regulators poking in, looking and learning how some of the fintech firms who are providing RegTech options, resources are developing some of those ideas. But I think the regulators will continue to look to the big banks, and because there's a lot of expectation that ultimately confidence and belief in what works, what's effective, what's done safely and securely will be happening by the big banks. So where we see the big banks actually partnering with the third parties or the fintech or RegTech firms, that's where we will see the sort of incremental adoption and recognition of these RegTech solutions by the regulators.
Thank you, Melissa. Jeff, do you have anything to add to that in terms of big picture predictions?
Yeah, I think one or two things, and I guess I concur with Melissa concurring with me. I'd highlight maybe a couple of other elements. One is I think that that there is we are moving into an era of what I would call an era of rising expectations, in the sense that as these tools become available and as the regulators start to understand better what they are and what they can do, then they will start to expect the firms to continue to apply best practices. And so as the capabilities of these technologies grow, and one I think in particular that Nick referred to earlier has to do with the use of sampling. I think that as techniques that let you really look across a broader universe instead of sampling, I think there will be greater expectation by the regulators that firms will deploy these, and that they will be preventing and detecting to a greater extent. And my former colleagues at the CFTC, the head of enforcement there, recently announced that the CFTC would actually very much take into account in its enforcement decisions, had the firms, detected it, had they had a sufficient program of detection, and had they self-reported. And so I think that, while, we are entering into more of a pro-growth era, I think that that will still be accompanied by robust enforcement. And then I guess the other area is that I think that, as some of these blockchain and ledger projects start to get implemented, I think we will start to see a greater utilization and experimentation with kind of real-time data from distributed ledgers.
Thank you, Jeff. Nick, from your end, very quickly, any big picture predictions for the year ahead of how RegTech will evolve?
Yeah, I think they've been generally well covered. I suppose there's two further points I would make. We haven't seen any sense of market rationalization, any sort of Darwinian survival of the fittest occurring yet in the RegTech market. There's been, if anything, an explosion of startups. So I think, picking up some of Jeff's comments earlier about the fact that actually for a number of institutions engaging with very small suppliers can be very complicated, it wouldn't be surprising to see a degree of sort of merger and rationalization occurring in the market over the next couple of years. I think linked to that, we are starting to see the emergence of the big tech companies and the big consultancy companies coming to the fore in terms of providing assurance and implementation support services. They're not so much moving into the space of buying out the RegTechs, but entering into joint ventures and partnership models where the big tech company or the big consultancy takes some of the risk of implementation onto an established legacy system. So I think we'll see more of that. I'm hoping that the work that we're doing on modernising regulatory reporting really gains pace and progresses rapidly over the year ahead. And I think this the final area where I think we will see more debate, more discussion, and more RegTech innovation is in the AML and the KYC space that Melissa and Jeff briefly touched on earlier.
Thank you, Nick. So we're coming to an end now, but I'd just like to open up for Q&A. And we have received one very interesting question, which I'm going to read out. And it's interesting because we have a regulator on the panel, and also because some of us are former regulators, and this brings things nicely together. So the question is from Carl Redfern from the Redland Business School. So he says, how do you open the right kind of dialogue between the policymakers and rule makers and RegTech providers? It is very hard in the UK to get into innovation or art of the possible conversations with the policy teams at the FCA who are drafting new regulations. So that's the question that's coming from Carl Redfern. Nick, I suppose over to you. Any views?
Yeah, so I think, we've very consciously adopted a learn through engagement approach over the last couple of years. I and my team have probably seen upwards of 400 to 500 different RegTech providers, consultancies, academics and others to get an understanding of the innovations that are occurring. And we genuinely operate on we will pretty much meet anyone at least once to understand what they're offering and what they're interested in. We then look at there are so many potential issues that the market and we could focus on together. So we have then tried to kind of catalyze development around a few key themes. And so where market participants and RegTech firms are involved in solutions that address those key themes, and for us that is reg reporting, AML, unlocking some of the consumer problems in terms of access to financial markets, where entities are involved in those sort of RegTech solutions, we have run events, we have run roundtables, we have run hackathons, and we do work closely with our policy colleagues to try and share what we're finding and share suggestions as to how we may need to tweak the policy landscape going forward. So I think the short answer to Carl is broadly the door is open. Come and speak to me or some of my team. Tell us some of your specific desires, concerns, issues, and we'll have an open dialogue with you about how we go about addressing some of those where we can.
Okay, thank you very much for that, Nick. We're coming to an end, but perhaps I'll ask one more question, and if we can keep the answer brief. This question is as follows. Do you think there is still an issue related to the legal and regulatory impediments to the sharing and use of data for regulatory purposes? So this question is coming from Gianluca D'Imperio from UniCredit. Melissa, I think this picks up nicely on some of the points you made earlier. Would you care to answer quickly?
Yeah, I'll do it as quick as possible. I do think that there are impediments, and I think it comes down to the particular use case of the data. Here in the U.S., we have expectations around avoiding disparate treatment when it comes to data being used for underwriting purposes of consumers. I talked a bit about the challenges in terms of financial firms sharing data for KYC purposes. I think the way that we're going to be able to move those challenges is by demonstrating the benefits and where the potential risks are when that data is used in those different contexts. But I do think we do have some limitations. I would also say a significant challenge exists also in terms of not just the data itself, but what are the machine learning tools that are being used to actually use a lot of data to ultimately determine outcomes. I think regulators are seeking information on how do those systems work and what are the potential outcomes, risks, and benefits when they're employed.
Yeah.
Thank you, Melissa.
This is Jeff. I would just add to that. I think that sharing of data, whether it was unclear from the question whether that meant sharing of data from regulator to regulator or between industry participants or regulators sharing data they've received with, RegTech firms to prove out these technologies. But, I think in all of those potential use cases or vectors, there are very often statutory limitations. So even, for example, at the CFTC, if we wanted to share data with another agency, there were often statutory or regulatory barriers, some of which you could overcome with a specific MOU and some of which you couldn't. I also think that in light of some of the recent well-documented cyber breaches of various individuals personally identifying information and confidential data, I think that the barriers to data sharing and people's sensitivity to what data goes where I think that the kind of burden of proof to show that you're handling data safely, and that if you want to move it from its safely confined area, if you've got it in a safe environment, to somebody else's environment or a pooled environment, I think the barriers of proof there will be even higher because of the greater sensitivity to kind of the vulnerability of that data.
Thank you, Jeff, for adding further color. One final question, and I'm going to direct this question to you, Jeff, particularly based on your previous experience working for the CFTC. Question here from Andrew Kalfas, from Deposit Slips. His question is, how do we engage with regulators in the states? So how could RegTech and FinTech firms engage with regulators in the U.S.?
Yeah, so that's a very positive note to finish up on. So regulators very much have their doors open. They're very interested to engage. At the CFTC, it's a dedicated function. You just email labcftc@cftc.gov. You don't need to hire lawyers or compliance people or regulatory affairs people. Generally speaking, the OCC and CFPB, they've got Office of Innovation or Project Catalyst. They have office hours. At the SEC, they have a blockchain working group. At a number of the states, for example, Illinois and Delaware, they have blockchain initiatives that you can reach out to them. And really, you don't need special connections. They're very interested to hear from innovators and, very accessible. And, we're making a point not just to be sitting in Washington in the case of those other than Delaware and Illinois who are in Washington, but the ones who, to get around the country and make themselves available. I know the San Francisco Fed also has a program that's similar to this. So really their doors are open, and they generally have reasonably accessible and very user-friendly websites that help you find them. And they really are looking forward to hearing from you.
And I would just add on to that, at the state level, the Conference of State Bank Supervisors is establishing now an industry body to open the doors to fintechs and innovators who are looking to operate across the states. So they too would be worth reaching out to. That's the Conference of State Bank Supervisors, CSBS.
Thank you, Melissa. Folks, that's all we have time for today, I'm afraid. Thank you to the participants for joining us today. A big thank you to Melissa, to Jeff, and to Nick for sharing their RegTech insights. We're really excited about discussing more on this in just a few weeks' time at RegTech Rising, taking place between the 31st of October to the 2nd of November in London. As promised, we have an exclusive gift for you guys. You can get 10% off your ticket to RegTech Rising this year by using the code FKN2535WEB. It's up there on the slide. We will be sending you an email with the link and the code within the next 24 hours, so look out for it, and we look forward to seeing you there. If you have any feedback on today's webinar or any recommendations for future webinars, please do complete our short survey at the end of the session. It should flash up on your screen shortly. Thank you and goodbye.